Good morning. How important is this? Will this mean a lot of derivative instruments have to be wound down, and what might be the impact on the market?
Yeah, good morning. So, no, I don't think this is quite significant. We have seen over the last few years anyways, the amount of participation coming through the P notes or the ODI instrument already come off quite significantly. Now, within these, how much are derivatives instruments? I don't know. There's some figures being floated. I guess about 25% of all P note exposures is in derivatives now, and of which how much is for hedging, how much is for genuine directional trades. It's hard to figure out. In fact, I'm not sure if there's a way for the P note issuer himself to figure out whether what the underlying purpose is. So to that extent, I don't think this is that significant really, and I don't expect any sort of major changes in the way the P note issuers or participants would behave. Maybe at the margin, a few of the P note subscribers would have to change, but otherwise not to the extent that the market would care.
Okay, so the market is not caring. It doesn't seem to be ruffled at all by this SEBI notice. But Pramod, before we let you go, you think this could promote more FPI registration, because that's what some legal opinion was indicating?
Yes, it has indeed. It has been happening over the past 12 months, especially ever since the taxation changes happened. In fact, we ourselves have seen several of the third-to P note subscribers getting FPI registrations and coming to India directly through FPI. Of course, there are still some complaints about the onerous process it has, but people are happy to be patient and come into India directly given the attractiveness of the market. So this perhaps will bring in a few more who are lying on the sidelines. But yeah, I tend to agree that you'll see more and more FPI registrations coming into India.
For sure. Totally take your point, Pramod. In fact, there's a school of thought which believes that now there's time to completely phase out P notes and the market won't bother much. But on that note, Pramod, your thoughts on the market itself now, since you talk to a lot of FIIs and you are on sell side. I just want to understand what's the thought process now. We have seen all-time highs, of course, for Indian markets. Do you think there's more to go?
Yeah, I mean, like we've always maintained, this rally has been totally driven by domestic flows. In fact, other than March, over the last 6-7 months, there has been particularly great FI inflows, really. It's been either tepid or negative. So this is a rally entirely driven by domestic savings coming into the capital markets, which we've argued in the past that is more of a structural phenomenon. Now, to second guess how long will these flows continue is perhaps beyond our remit. We'll simply have to wait and watch how the average Indian saver behaves. So to that extent, we will be a bit circumspect, because the fundamentals alongside don't really support the sort of rally or the valuations that the market is quoting at. So to that extent, to the extent that we can't predict how long and how sustainable these flows would be, we would rather be more cautious.
Okay, Pramod, thanks for joining us and speaking with us. By the way, the stock that's